Welcome. In this video, will Xcn coin price increase 2x? We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand. When we look at the current price structure on the chart, we are faced with a striking and promising picture. In previous periods, the price had been forming lower lows and lower highs, showing classic signs of a bear market structure. This lower low, lower high formation indicated that the market was under pressure at the time, sellers were more dominant, and investor psychology was struggling to find direction in a maze of volatility. However, over time, this structure slowly began to transform, taking on an entirely reimagined appearance. Now, price movements are starting to form higher lows and higher highs, signaling a sort of awakening or rebirth. This is considered a very strong and positive signal in technical analysis literature, because this new structure clearly shows that the market has shaken off the effects of the bear and is beginning to embrace bull energy. These types of transition phases also reveal how the complex mosaic of emotions that guide investor decision-making goes through transformation. The higher low and higher high structure demonstrates that price movements are not just sideways or weak, but rather are exhibiting upward momentum. This is one of the clearest signs that buyers are gaining strength in the market and the influence of sellers is diminishing. In a sense, a kaleidoscopic transformation is taking place. As each new low forms higher than the previous one, market dynamics begin to flourish and take on a more verdant appearance. This shows that investors are now more inclined to buy into the uptrend, and each dip is increasingly viewed as a buying opportunity. With this new behavior in price action, it is now possible to say that the market has entered an uptrend that is being supported. This trend is not just a graphical structure, it also signals a process in which investor psychology becomes clearer, expectations are forming in a more positive direction, and risk appetite is increasing in a balanced way. So we're not just talking about a technical transformation, but also an emotional and mental one. That's why higher low, higher high structures go beyond being just a technical analysis element. They become a complex and captivating tapestry that reflects the state of mind of market participants. This structure within the market invites investors to a deeper understanding. Each new high exceeds the previous one, and each new low forms at a higher level than before, demonstrating the internal consistency of the uptrend. Such formations can bring not only short-term gains but also sustainable upward movement. Higher lows indicate that buyers are entering the market at increasingly higher levels with each pullback. This suggests that the support levels are gradually moving upward and that momentum is gaining strength. This intricate structure is not just a chart analysis, it is an orchestration that reveals the underlying supply and demand dynamics of the market. In this context, it would be a logical step for investors to trust in this uptrend and reshape their strategies accordingly. Because when there is a rising structure in the market, it usually indicates that new opportunities are on the horizon, volatility is increasing, and prices are likely to continue their upward journey. But we can't make decisions based on this alone. Let's also take a look at other metrics. Stay tuned. One of the most striking structures on the chart is undoubtedly the large cup and handle formation currently developing. This formation is a classic trend continuation pattern frequently encountered in technical analysis and is considered highly reliable. The current price action appears to be constructing the handle portion of this cup and handle formation, which can be interpreted as a sign of a potentially stronger rally in the future. The healthy completion of this formation could open the door to significant profit opportunities for investors. Let's first break down the overall structure of the formation. The cup consists of a U-shaped structure that forms after the price declines over an extended period, reaches a bottom, and then recovers back to its previous level. This structure indicates that the prior selling pressure in the market has ended, supply is beginning to wane, and demand is starting to re-emerge. But it doesn't end there. The critical point is the short-term correction that follows this U-shape and the subsequent breakout to the upside. This second correction, or the handle portion, signals that the formation is maturing and nearing completion. What we are currently observing on the chart is exactly this scenario. After forming a large and broad base, completing the cup, the price has moved upward, making a strong recovery. Following that, due to short-term profit-taking or psychological resistance, the price has naturally pulled back a bit. However, this pullback is not the kind that sparks panic. Rather, it is a consolidation phase where the market is gathering strength for a new move upward. In other words, the handle is being formed, and this is a very positive development in terms of a healthy formation process. At this stage, the behavior of the handle section is critically important. Typically, volume tends to drop in this area, and the market appears more calm and tight. But this should not be misleading, as it resembles the calm before the storm. In order for the formation to be completed, the price must break out upward from the handle, and for this breakout to be sustained, it needs to be supported by volume. When such a high volume breakout occurs, what is known in technical analysis as a breakout takes place, and this often brings sharp and rapid upward movements. This represents a high profit potential for investors. The target of the formation is classically calculated by adding the distance from the lowest point of the cup to the upper resistance level to the breakout point. So, the deeper the cup, the higher the potential target. This target is usually a level that investors closely monitor and often coincides with psychological resistance. On the current chart, the cup appears to be quite deep and wide. Naturally, this suggests that the target level is significantly higher and that the price has considerable upward potential. Additionally, such large cup and handle formations can influence not only short-term moves, but also medium and long-term trends. Since the formation takes time to develop, often appearing on weekly or daily charts, it indicates that investor confidence is being rebuilt slowly but steadily. Therefore, cup and handle structures can act as precursors to sustainable trends in the market. Moreover, these types of formations often serve as early signals of bull markets and alert investors to position themselves in time. The current structure likewise suggests that this bullish energy is intensifying and that a major move may be just around the corner. The recent developments observed in the MACD indicator offer quite positive and promising signals regarding the current market structure. In particular, the upward crossover that has appeared in the latest candlesticks suggests that the market is starting to gain momentum and could be signaling the onset of a potential uptrend. The MACD indicator is a powerful tool frequently used in technical analysis, allowing investors to interpret both trend direction and momentum simultaneously. The current crossover, especially since it is upward, indicates an increased potential for prices to move higher. First, it's useful to recall the logic behind the MACD. This indicator is derived from the difference between two exponential moving averages. A 9-period moving average is then plotted over this difference. The crossovers between these two lines generate strong signals about the market's potential direction changes. The upward crossover we are currently observing is one such signal and is generally considered an early indicator of trend beginnings. In the last few candlesticks, the MACD line has crossed the signal line from below. This type of crossover indicates that buying pressure is increasing and that sellers are starting to weaken. Especially if this crossover occurs not in the negative zone but near the zero line or in the positive territory, it further strengthens the probability of an upward move. In the current setup, the upward movement of the MACD line shows that buying strength is gaining momentum and that the market is trending toward recovery. This can be considered a highly positive development for investors. We should continue to monitor MACD crossovers. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.